Okay. Now, we've had a big dip yesterday. Did you buy it?
So we bought India. So we did not buy domestic equities this week on the dip because we are a little bit concerned about the interest rate move, and we thought India would be a non-correlated asset to our move in interest rates. But we do think this is the start of another buyable dip. We had 2 in January that we took advantage of and bought aggressively. And this one, we're being patient on the domestic side because the 10-year has moved from 3.8 to 4.3. That's a pretty violent and historic move. And I think we want to be a little bit patient here as we get more inflation data on Friday, because if the 10-year stays at this level, I think you'll see some added pressure on the equity markets. And again, that will be buyable because we believe that we're going to see some acceleration on equities as we get through this choppy first quarter as we've been expecting. So it will be a buyable dip, but you have to be in the right places, and timing is going to be critical.
And it's all about the Federal Reserve and what they do with interest rates. That's where we are?
So I would say right now the bond market is more important than what the Fed does, because if you look at what's happening with the bond market, they're tightening for the Fed whether they like it or not. And the Fed's really, their hands are tied because of how much government spending we have. They can raise rates or cut rates, and if inflation stays where it is, you know, we're going to have a problem. So I think you need to focus more on the Treasury moves and the 10-year versus what the Fed does. I think it's safe to say no cuts in March. But of course, May is a coin flip at this point in time. And if oil keeps accelerating, we may have May off the table. So I don't think we're going to get 4 cuts this year.
So am I right in saying that for much of last year, you were out of the market, but this year you're buying dips? Most of the dips you will buy into, depending on how far down it goes. Is that an accurate statement? You buy dips?
That's exactly right. Last year, we were between 50 to 90% cash and being tactical. This year, we're going more fully invested as we go through this first quarter.
Okay, Eddie, clear-cut position, we understand it. Eddie Ghabour, thanks very much for joining us. Always appreciated.